In the UK, people often regard that property prices either rise or they fall, and they take the property as a whole, but what they actually don't generally understand is that property itself, in other words the physical building, depreciates. Now, at this point you're probably thinking I'm off my rocker and that surely property either rises or it decreases. So in this video I'm going to explain to you why property depreciates and to give you a much clearer understanding of this concept, which is really fundamental if you want to really understand why prices rise and why prices fall. In a previous video, which I talked about where the property prices are likely to go in 2021, I briefly covered this concept, but I just wanted to cover it in a bit more detail. I first learned this concept that property depreciates while living in the US. I lived in Florida for 9 years, and if you have rental properties in the US, you're able to take a depreciation deduction, and it's not an insignificant amount. You're able to take a whopping 3.636% on an annualized basis, and you're able to take that for 27.5 years. And in fact, what that actually means is that by taking that percentage, by the time that 27.5 years has passed, you have fully depreciated the property. Now, let me make a distinction. When I say property, I'm talking about the physical structure that sits on the land. It does not include the land itself, because land doesn't depreciate. In fact, land is the thing that appreciates and depreciates. So you need to make that distinction between it. So if you think about it, it's quite logical, and you probably already understand this. If you are in the position where you're buying properties, often you're looking for a property that is what we would call significantly below market value, and it's referred to as BMV. So often the yardstick that's put out there is 25% below market value. But I would actually challenge you and say that you don't generally, even if you're buying it at that price, you're generally not buying it at 25% below market value, or wherever the percentage happens to be. What you're buying is an asset that has depreciated. So the land value remains the same. But if you take that building and it was a new build, it would, what a lot of people refer to, receive a premium. Actually, it's not a premium, it's the price that that is worth at that particular time. It's really like a car. If you buy a brand new car, you pay the top price for that car. As soon as you drive it off the parking lot or off the garage lot, then it starts to decrease in value. We all know that, and you often hear people talking about it dropped 20% just by driving it out of the garage. So we understand that assets like that depreciate, and of course they continue to depreciate. But when we think of houses, we don't think of them depreciating, and the reason is because it's disguised by the land value going up. So let's go back to that example where you bought this brand new house and you paid the top of the market price. It depreciated. If you try and sell that in a year's time, you won't get the same amount of money as you would when you first purchased that. Now, from my own experience, I go back to the 1970s. I had a flat in the student district of Edinburgh, and I bought that flat for $7,500. By the time the end of the 70s, and that was 1973, by 1979, that flat was worth $21,500. I bought a house in Edinburgh in a nice district for $21,000 also in that same year. And yet, when you look at the comparative values of those particular properties, there's a very significant difference. The flat's worth currently over $400,000. The house is worth around $300,000. The explanation is that the flat had already depreciated in value, whereas the new build property I was paying top of the market, and that depreciation has still to to happen. Now, obviously there's a little bit more factors than that in terms of locational value. So the locational value of one area probably went up more than the other. But there was still a significant difference or a significant gap between the values of those two properties. And it wasn't just down to locational value. So you buy this house, you pay the top of the market price, and it then starts to have wear and tear. So the house that you bought as a below market one has gone through that period of dilapidations and needing fixed. So you bought it and you needed to fix it up. So what happened when you fixed it up? Well, it was revalued at a much higher price because you had put in, what you had actually done was you had improved that property. Now you might be thinking, yes, but the value went up more than the cost of the improvements, and that's absolutely the case. But then if you think about it, that makes sense, because when somebody builds a new house, and that's what I do, I'm a property developer, I build new houses, there's a margin of profit in that new build process. And roughly, we look at about a 25% margin to build a house. So we're looking to get a return of $25,000 on the selling price of that particular house. That's all you're doing when you're buying a tear-down house that needs to be renovated. You're adding that value back in, and you, as the entrepreneur, are taking that profit out of the house. So that's very fundamental to understand, and the reason is when we come on to future videos, I'm going to explain the concept of where real value goes, and it always goes into the land. But in understanding this whole concept of house prices, it's important to understand that the value is in the land, and it's the land that goes up in value when properties seem to appreciate, and when properties seem to crash, it's the land that has gone down in value. And I'll explain that in a future video about how all economic output goes into the land, and how the land is the thing that drives the rest of not only the property market, but in fact drives the stock market. So that's for a future video. But I just really want you to get the concept that this is about property depreciating, and you have to separate the value of the property from the value of the land, because the land underneath it is not going anywhere, it's not going to depreciate. It will have a different value depending on the economic circumstances. Now that might seem a little unclear talking about in terms of land going up in value and down in value, but you'll understand that in future videos where I explain the concept of land and where the value is in the land. Now, if you have any questions, please put them in the comments below. If you'd like me to clarify things, then please do that. And if you've got any particular areas you'd like me to cover in future videos, then please put them in the comment section below. And I look forward to speaking to you in the next video.